Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for the segment, we have Dave Mazza, head of product over at Direxion. Dave, it's great to see you as always. Welcome back to Trade Talks.
Thanks for having me back.
All right, let's talk about corrections that we've seen, especially in some Nasdaq names. They've proved to be short-lived over the past 3 years. So, Dave, the question is, does this continue with an evolved economic backdrop and move with real interest rates? What are you looking at here?
Yeah, it's interesting, Jill. Every pullback we've seen across the markets, but especially in the Nasdaq, has been met with eventual buying activity. I think investors, of course, question, is this time a bit different because we've seen the economy evolve. We've seen COVID eventually improve after the scare with Delta. And now the question is what's going on with interest rates. But I still think the backdrop, it remains positive for markets from here. So investors do need to be cognizant, though, but we might actually see a further correction before we actually see that bounce back, just because markets did become extended, especially relative to 50-day or 200-day moving averages.
So then where are the longer-term opportunities?
Well, I still think investors will be benefited by looking at disruption, looking at areas in the, technology, but not just in the tech sector, looking at how technology is changing the way the world works across industries, across sectors. And so for me, I still think there's an opportunity in so-called disruptive innovation. But at the same time, investors may be cognizant that we are in an environment where we're going to see increases in inflation. So there could be some also opportunities in traditional out-of-favor sectors on the cyclical side, like financials and energy. So net-net, it's going to be a lot more differentiated going forward than just that simply growth versus value trade that we've seen over the last few years.
So, Dave, if we want to get exposure to these disruptive companies, how can investors get it in ETF Umbrella?
I think one of the opportunities investors could look at is the Direxion Moonshot Innovators ETF, ticker Moon. That's a fund focused on 50 names that are all small to mid-cap companies at early stage in their innovation. So you're going to have areas ranging from clean energy to nanotechnology, genetic engineering. But the important thing here is that they're a bit insulated from really what's happening in this mega cap tech or mega cap growth that's very interest rate sensitive. These are smaller names. They have the potential to be more volatile, but that's really where I believe that the next leg of potential growth could come from across the markets.
And what's the methodology behind this ETF? Is it active?
It's actually an index-based approach, but it's trying to take some of the ideas that active managers have used for years and combine them in a unique way. So the first thing we do is we actually look at the culture of particular companies. Are they innovative? So is the biotechnology company more innovative relative to another biotech? Is an industrial company more innovative? And the way we do that is we actually scan corporate filings to look for words that historically have focused on an innovative culture. But we also combine that with whether companies are actually spending on innovation, favoring companies that spend more on research and development relative to their sales compared to others in their industry. So I believe this kind of combination of talking the talk and walking the walk can really weed through some of the noise that's out there and identify that next leg of potential growth again on that 50 early stage companies.
All right, Dave, appreciate the insight as always. Great to see you. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.